Welcome. I am Ernie Goss, research economist with AIM of Kansas City. Today, I'm here the second Tuesday of the month of September to report on our workforce index for the state of Missouri for the month of August. Now, the workforce index, as we measure it here at AIM in Kansas City, is the number of online job openings divided by the number of unemployed. So the higher that number, the better. As online job openings go up or the number of unemployed workers goes down, or both happen, then that index goes higher. The range of the workforce index is 0 to 100. Anything 50 and above is expansion. That's how we count it here. Now, what did we get for the month of August? Well, Missouri is moving in the wrong direction. In August, it went from 50.6 in July to 49.2 in August. Of course, that's only slightly below growth neutral, but it's moving. It has been moving in the wrong direction. In other words, the number of online job openings relative to the number of unemployed not moving in the correct direction, or the direction we'd like to see. Now, where are the number of jobs? Where are jobs most plentiful? That's online jobs, online listings of jobs. First, number one in Missouri is sales. Number two, management. Number three, customer services. Now, we've seen that for some time now. For many of the states that we compute workforce indices, customer services is typically a pretty strong area. Now, in terms of the percent of employment, though, in other words, we take the online job openings divided by employment now. Where are those numbers? Where is that the best? Finance. Finance is number one, where we have a lot of online job openings relative to the number of employed workers. Engineering, number two. Of course, engineering typically is more of a leading economic indicator, tied to manufacturing, tied to other industries that are typically leading the economy. And number three, customer services coming in number three in terms of online job openings. Now, here you see I've placed a graph here, a chart that plots the direction from between May of 2014 and August of 2014, and you see clearly it's not moving in the right direction. You see that, in fact, last month Missouri was ranked number 33 in the nation, 33rd best in the nation. It's 35th this month. Obviously, not the way you want to move it. So, what were the top states? If Missouri is not one of them, what are the top states? North Dakota, no surprise there. It's been tops every month we've done this since May. South Dakota, number two. Minnesota, number three. Number four, Iowa. And number five, Kansas. Well, I think you get the idea right there. This is in the midsection of the country where energy is important, where the energy production is important, or agriculture, even though agriculture has been weakening, but still in that area of the country where we do see a lot of agriculture. Bottom states where you don't want to be. Well, I shouldn't say you don't want to be. Other things equal, you don't want to be there. I mean, I love Mississippi. I, in fact, once lived there, but it's not. It's number 50. So that's an area. That's a state where we're not seeing as many relative. The workforce index is the lowest in the nation. Number 49 is Maine. Number 48 is California. Number 47 is New York. And number 46 are the bottom five, Alabama. So those are the states where you're not seeing as many online job openings relative to the number of unemployed. Now, going forward, what should you keep an eye on? What are the things that you need to be watching out for, at least as I see it as an economist? Keep an eye on the housing market. That would be the Case-Shiller Home Price Index, which comes out the last Tuesday of every month. We'll see it coming out the last Tuesday of September, and that'll be for the month of July. It's quite a bit of delay there, so keep an eye on that. We want to see it come down a bit, like to see 5 to 6% year over year, a little bit stronger than that. Check the Census Bureau housing starts. That comes out once a month. That's been weakening. We need to see it stronger. We need to see it a lot stronger. Keep an eye on that. Keep an eye on the yield on 10-year Treasury. it's been coming down. Is it because inflation is coming down? We don't really know. As inflation comes down, those interest rates typically come down. Keep an eye on that. That's certainly also, it may be coming down because people, investors globally, just don't want to be holding Argentina bonds or Chilean bonds or Brazilian bonds, and they come and buy U.S. bonds. As I sometimes have said, we're the healthiest horse in the glue factory. Our debt's not all that good, it's just better than everybody else's. So keep an eye on that. CPI for the month of August and for the month of September, those will come out September the 17th. And then the September numbers come out October the 22nd. Need to see those numbers in the range of 2, year over year that is. That would be August to August or September to September. See those between 2 and 3%. Below 2%, get a little concerned. Below 1%, concern of disinflation. Above 3%, concern of too much inflation. What we're looking at right now is a turning point, and economists have a devil of a time with turning points. In other words, when things are going like this, like the economy or the job market, that's easy to do, predict. When things are going like that, down, predict. And when they start flipping from negative to positive or positive to negative, much more difficult to predict. That's where we are on inflation. We're right there. My bet is we're probably going to be moving up a bit in inflation, but not significantly. So what are the risk factors going forward? As I said, higher inflation or low inflation, below 1% or below 3%. Housing market weakening, and check the Census Bureau out for that. Oil prices above $100 a barrel, we moved actually downward on that. That's good because of supply increases, and demand has been pretty strong. But if we had supply disruptions, significant supply disruptions, and I'm not talking about small ones, I mean significant supply disruptions, pushing prices. I mean, September of 2008, we saw oil at $147 a barrel. Are we going to see it there again? No. But if we had significant supply disruptions, I guess conceivably we could see it, but that would be have a dampening impact on the economy. Another risk factor for the state of Missouri are trade embargoes with Russia. And now you say, why is that an issue since we don't do a lot of trade between Russia and the U.S.? It's because these embargoes typically spread. In other words, the political alliances, those nations that have political alliances with Russia, they begin restricting trade with the U.S. So that's the real issue, and that's something we do have. There is some concern about. Finally, Europe. If Europe's probably bordering, and many of the countries are already in it, a recession, but the entire Eurozone is almost in another recession. And of course, what that means, they don't buy as many products from us as they move into recession. But also their central bank, the European Central Bank, lowers interest rates, which has the impact of raising the value of the dollar. It reduces the value of their currency, the euro, raises the value of the dollar, makes it more difficult for our manufacturers to sell in Europe. And of course, manufacturing is very important for the state of Missouri. Of course, agriculture, likewise, it makes it more difficult to sell Missouri agricultural products outside the U.S. as the value of the dollar increases. So that's another risk factor. So all in all, it was somewhat of a disappointing report for the state of Missouri for the month of August. That's the workforce index. As I said, it moved below growth neutral. So we'll wait till our second Tuesday of October when we come out with our results for the month of September. So this is Ernie Goss. I'm research economist with AIM of Kansas City. Until we meet again here the second Tuesday of October, may your economic cup runneth over. And thank you.